After a conversation with Jonathan Twomley last week that had me thinking that commercial real estate, specifically Class B and Class C multifamily properties, could see 50% haircuts, not in 24, not in 25, but in 2026. It sent me on a journey to read more and more about the commercial real estate market. And I found one article particularly interesting. It's out of The Real Deal. If you don't follow The Real Deal, it's somebody I follow on Instagram. They put out a lot of material focused on real estate investors. And in this particular article, Scott Rechler says that it's not survive through 25, but it's fix in 26. In that article, Scott Rechler says we are going through Dante's Inferno, the 9 layers of hell. New York commercial real estate is currently stuck at level 1, which is limbo. Points to anybody that knows the other 8 levels of hell. This is something I don't know. I don't know the reference. But yes, Dante's Inferno, 9 layers of hell. The commercial real estate market is stuck in limbo. What does that mean? Well, it really means that conversation with Jonathan Twomley and I is something you should probably pay attention to. We are looking at loan or deal volume at very low levels. And when you have that, you don't have pricing discovery. Pricing discovery is required so we can kind of clean up the mess that we have created. Also, banks are reluctant to foreclose. This was something that was very eye-opening to me with that conversation with Jonathan Twomley. We talked about last time banks racing to foreclose because if you were the first to foreclose, you got the best price. But when banks went back and looked at the situation, their entire loan book was blown up by foreclosures. So it might have felt good to get the first one, but all subsequent foreclosures kept grinding lower and lower. So banks are reluctant to foreclose. So we are again not setting prices. And then finally, Scott Rechler in this Real Deal article talked about kicking the can down the road is not a great strategy. Like a lot of the conversation with Jonathan Twomley, it has become obvious that the commercial real estate market will have its moment of pain. It is just extended to 25 and more will happen in 2026. So again, a lot of stuff around this conversation with Jonathan Twomley and I was extremely valuable. And I hope you've seen that video. Well, let's talk about the jobs number. We did get that payroll number on Friday, and it was kind of what we expected and we talked about. We got a number that was lower than expected, 142. And like we talked about a month ago, I don't remember if you guys remember this, but a month ago, I postulated, I predicted, I guessed that the unemployment rate would come down, right? It had ticked up two basis points to, or 20 basis points, 0.2 last time from 4.1 to 4.3. And I postulated that, you know what, that hurricane in Texas may have had a larger impact than we originally thought. So we did see the unemployment rate fall to 4.2, which is what we expect. Now the question is, we got 3 generally weak jobs numbers. The jobs number, like all reports, is even worse than it looks due to full-time employment and part-time employment. I think at this point, folks, we need to give up the ghost. My call for a November rate cut, the first cut in November, is wrong. We have Fed presidents basically saying out loud that a rate cut is coming in September. So again, I want to admit I am wrong. The first cut will not be in November. Now we got to talk about, will it be 25 or will it be 50? I think that is an important discussion to have. So what are the Fed presidents saying? How about Austin Goolsbee? Austin Goolsbee says, if we are going to have a soft landing, you can't be behind the curve. And then in quotes, I put on rates. Really what he's saying there is you can't be this restrictive heading into a slowing economy. You gotta institute some shock absorbers, if you will. So again, I believe Austin Goolsbee is saying quite clearly a rate cut is coming in September. And more importantly, you could expect multiple rate cuts. I do believe that the current spread is 63% for, or no, 60% for a 50 basis point cut, and then a 40% for 25. We'll talk about that later because I do think that matters. Right now, a lot of people are calling for 100 basis points by the end of the year, which you've heard me say I agree with. I just thought it would be 50-50 November and December. Again, I was wrong. One more Fed president. Let me get it. Fed President John Williams. John Williams has endorsed a September rate cut, and he is open to doing a larger cut. We must reduce restrictiveness. This rate cut will not be our last. Again, when Fed presidents are saying the quiet part out loud, we have to relent. We have to admit we were wrong, and we are going to get a September rate cut. Now, let's talk about 25 or 50, because at this point, I have no idea what they're going to do. But we need to think about what's already priced into the market. The first thing I think about this morning is if the Fed only cuts 25, I have a sneaky suspicion mortgage rates go up. Now, how can that be? Well, folks, over the last week or so, I have told you, I've guessed that it looks like the market is once again leading the Fed. I believe the market has started to price in a 50 basis point cut, and we have seen meaningful fall in mortgage rates. In fact, according to Lance Lambert from Resi Club, we are at a 18-month low on mortgage rates. We have the DSCR market, according to the boys at Convoy Home Loans, routinely putting 30-year money under 6. Yes, folks, DSCR loans today appear to be even below conventional. Again, reach out to them, talk about your situation. Tell them you came from one rental at a time, and either Dustin or Jonathan will take care of you. But if we only get 25, I have a sneaky suspicion rates will go up. Why? Because again, I think the market is leading. Now, what happens if we get 50? I think it's going to be very interesting. I think 50 could be taken as a sign of fear. Could be a sign of fear. The last thing I think the Fed wants to do is send a signal to the market that the Fed is scared. I think the Fed has to come out and give the 25. And don't forget, this meeting, we're also going to get what's called their SOP. You could think of that as the dot plot. They could use the dot plot or the SOP to kind of paint a picture of more rate cuts coming. So they could come out with the 25 and basically tell the world that more is coming. This is going to be an important meeting. This can, as I think it was Austin Goolsbee. Yes, Austin Goolsbee. This could lead us to a 1994, which is the only soft landing over the last 50 or 60 years. The Fed, no doubt, is still aiming for a soft landing, but one is not guaranteed. In fact, I think if you go back and look at the history, most of the hard landings were first called soft landings, and they didn't realize what was happening. So again, these are things that are very important. We're going to get a reading on CPI and PPI this week. These are the last meaningful economic numbers before next week's Fed meeting. Those will be important. If you get a super soft CPI, which I will talk about in a minute, you could get that 50. You could get that 50. But let's talk about that in a moment. We have to, as real estate folks, again, we are in a buyer's market. You are clearly seeing more and more firms, Housing Wire, Resi Club, all these other great analysts basically saying, hey, inventory is declining. We are seeing more expireds and cancellations. This is a buyer's market. Not only has demand pulled back, but now we are seeing more and more people take their listings off the market. So let's talk about CPI. That is the big economic number of the week. It comes out on Wednesday. We always talk about 4 metrics: year on year, month on month, headline, and core. I will give you the forecast. I will tell you what was last and then give you my thoughts. Let's go with headline first. Headline month on month is expected to be 0.2, and it was 0.2 last month. This is the big one. Headline is forecast to be 2.6. Last was 2.9. I suspect if we get such a large drop in inflation, this will give the Fed cover for a 50 basis point move. I think CPI is that important. If CPI comes in at 2.6 or less, a 0.3 drop, I think a 50 basis point move looks even more likely. Now, core, not so good. Core year on year is expected to be 3.2. It was 3.2 last time. Month on month, 0.2. It was 0.2 last time. So we may be seeing drops in energy and things of that nature, which is not a part of core. But, we may see a drop in headline, but we are not seeing the drop in core. These are important thoughts. Then on Wednesday, we will get weekly jobless claims. Again, that's an important number. We're trending right around 230. And we have PPI, Producer Price Index, kind of wholesale inflation. And then Friday, we close it out with consumer sentiment. All right, what is the consumer feeling? So a lot of important things to think about. I want to close with first a reminder. If you are part of our school community, One Rental at a Time has an amazing school community with over 250 members. I'm going live at 8 a.m. We're going to talk for an hour. We're going to do a Q&A. We're going to talk about real estate, buyer's market, writing offers. Whatever you want to talk about, we will be going live. You just go to the calendar function, and I will be starting a Zoom at 8 o'clock. 8 o'clock Pacific. I hope to see you there. It will be recorded, so if you can't watch it live, it will be posted later today for you to watch on replay. So join school, be a part of it. I want to give a final thought out to Cody Sanchez. Cody Sanchez via Twitter or X wrote up a great kind of series of posts about somebody that is on my Mount Rushmore of investors. This, of course, is Sam Zell. Sam Zell unfortunately passed away, I believe, earlier this year. His moniker, the Grave Dancer, is what he built, basically taking advantage of the 1980s savings and loan debacle. But Cody Sanchez wrote up 6 kind of points that she learned from Sam Zell. Number 1, if it ain't fun, we don't do it. One of the things, if you've actually watched any of Sam Zell's videos, which I highly recommend, or better yet, got his book, I think his book is called Am I Being Too Subtle? Now, again, if you're going to watch Sam Zell and you're sensitive to swear words, you may not want to watch it because he let them fly. But yes, if it ain't fun, we don't do it was a moniker for Sam Zell and his companies. Number 2, always leave money on the table. Sam Zell actually has a video talking about a deal that he overpaid $1 million for because he thought the relationship was that important. Number 3, nobody wins if they don't play. This is my problem with the doomers and crash bros. They are always doomers and crash bros. I have no problem being a bear if sometimes you're a bull. I have no problem with people saying, you know what? I love recessions because that's when assets go on sale. If you're not playing, you can't win. Number 4, control the downside and you control risk. Folks, if you read my book, One Rental at a Time, you know that's exactly what I thought all the time. I was only ever concerned with the downside. That is why I created that moniker, No Alligators. I didn't want to have negative cash flow. It was not possible. Only learned that after doing it once, and it was no fun. Again, control the downside, you control risk, and then again, upside will take care of itself. That is my little twist or addition. Number 5, when everyone goes right, look left. Hopefully over the last 6 years or so, folks, you have seen me do this repeatedly. Lots of people ran after Airbnbs. They ran after syndications. They ran after all this stuff. And not only did I not go that way, I sold into that chaos. Again, when I see the masses go one way, I not only look left, but I get like the heebie-jeebies with everybody going that direction. And then number 6, listen to your own song. You only got one time, folks. Do it your way. Just do it your way. Alrighty, folks, I hope to see you as a part of school. Not only we do live monthly calls with myself, we have weekly calls with millionaires. Here's a question. What millionaire of my weekly conversations would you like to see and ask questions of? Whoever you guys vote for the most in the next 48 hours, I will try to set up and put on another school session where you could ask them or myself questions. We are go-givers here. We want to grow the middle class. We believe that inflation's a feature, not a bug. We believe focus and daily discipline wins. We believe in a 10-year journey where the first 5 years suck. I'm here for it. I want you all to win. I want you all to move forward. If I can do anything to help you, just leave a comment below. I will see you in school in about 15 minutes. Later.